Welcome back, guys. This is Kairat Forex Academy. In today's lesson, we want to quickly look at a concept known as a repulsion block. So discussing what repulsion block is and what they mean. Now, without wasting much time, a propulsion block is simply a candle that has previously traded into an order block. Now, that order block could either be a bullish order block or a bearish order block, and then takes over the role of price, acting as either a support for higher price movement or a resistance for lower price movements. I'll quickly show you what that is as you look into the chart. Now, let's say this is an area of, okay, let's just take this region for example, where we see a high. I'll zoom it in so it becomes more clearer. Okay, so looking at this price range right here, when price displaces, that is breaking this low, you can see that this high was a little bit taken out, and then it breaks down, taking out this structure. Now remember, this last up close candle could be days, you can choose to use all of them, okay, yeah, because they are series of consecutive up close candle. But for more refinement, you can choose to go for only dates. Dates here is the bullish order block. Now, after price has retraced into an order block, which is dates right here, and then starts to displace lower. Okay. Now the next order block, which price will come and retrace into as a form of a resistance, is what we refer to as the repulsion block. Now I'll show you that in a moment. Let's see. Okay, this here, all right, let me make use of let's figure it too. Okay, this one side. So I want to make use of it too. Here's our order block, and you can see price came back and retraced into it. Zoom in again. Okay, so you can see how price displaced. So price came back into the order block, and then it starts to display. Okay. Now on reaching down, so taking out this high, you can see that these are also series of order blocks. Okay, you can ignore this because it's also in line with this and this here will also create one order block if you also check it on a higher time frame. So you can also be considering all of this to be an order block. Okay, now when price comes back and traces into this order block, what happens? It tends to push price lower. Now this other block right here is now acting as a resistance, so thereby pushing price lower. So we can refer to these blocks here as a propulsion block. Remember, a propulsion block, if you use the dictionary, to propel means to push something. Okay, yeah, so what these blocks are doing is they are trying to propel price below. Now when this price also starts to drive down, we also want to pay attention to this this last up close candle right there. This up close candle now creates the next order block for us, which is known as the propulsion block. So I will be highlighting it. Okay, let's highlight this one first. Price retrace after taking it. Came in down, but we might not really consider this here because there was no nice displacement. So let us just quickly consider this next rundown right here, because this was the next significant rundown that actually broke this structure very, very well. So now the next, wait for price to retrace to the last up close candle. Now this up close candle now will not be acting as a resistance. Okay, now when alright, so that's it right there. So you can see that when price comes back and retraces into this block right there, that should be your sell entry. Okay, so right there you'll be selling inside of this repulsion block. So once price touches it, it displaces. Okay, now it came down, broke structure down. Now where should be your next focus? The last up close candle. This is your next propulsion block. Now let's see how price will react to it on getting to that place. Let's draw it out in time. You come here, you place it. You can choose to use the week, the last week. You can also choose to use the body, whichever one that's okay with you. So you draw it out in time. Can you see? Now price drops down, comes back again and retraces back into this last up close candle, which is also the next repulsion block. And let's see how price reacts. Can you see how price displaced, came down right enough? So where else should be your next target? Your next target should be this one right here. We can consider this too. Since this one is small, attach it to this one. We can see this as a whole other block. So let's draw our rectangle and place it right there. Okay, so let's see if price can come down. Okay, price really went very far and didn't come back up to this vacuum block. So things like this can also happen, but let's keep watching. You can see, let's draw it out in time. Beautiful. Can you see? After price moved down significantly for a very long time, even this one was also acting as a propulsion block to also support this price move. So after this break here, it also gave us a little displacement. So you can see this move here, this displacement was responsible. You can see this propulsion block here was the one that was responsible for this down move. You can see, so after this occurred, it came back to it, tested it, 1, 2, 3, and then price moved lower. And remember, we still have one at the top, and what was price coming to do? That one was not tested. Price came back again and tapped it one more time, and then it started displacing lower. As it was displacing lower, you can also see it broke the structure down. So here should be our next focus, the last up close candle prior to this down move. So we'll come back and highlight it one more time. You can see how you're getting a lot of entries. Okay, so this will give us your next entry. Your next entry should be right below here. So you drag it out in time. So if you missed this one, you have a second opportunity to get into the trade right there. So you sell at this point. Your stop loss should be above this, above the candle, right? Your vacuum, your repulsion block, you put your stop loss above it, and then price starts to displace. So you can start aiming for either of this low, this one, or this one. But I have a low that I was aiming for, a sell side liquidity. You can see price drops again. Once this structure is being broken, you pay attention to this, to the low here. Let's see. I saw another opportunity to sell while still on this move. You can see. So after price broke this region structure here, it came back again and retraced inside of this repulsion block. So if you miss this one, you have a second opportunity to trade here. If you miss this, you're also having a second opportunity to trade right here. Now this one came back, traded into here, now broke down. Where should be your next target? Can you see it? So that's how simple it is to make use of these tools. They are not just that difficult to make, they are easy to understand. So these are bearish propulsion block. You can see price tapped into it, although you might get knocked out here. at first, but as time goes on, we still want to aim for, remember, okay, yes, like I said, let's zoom in a little bit. Sorry, this was where I was explaining. All right, we were very close. So once you start taking the trade, remember I told you that your area of, you should be collapsing your trades where there are sell side liquidity resting. Now take for instance, this was a low that was created and price came back way up. We tested this repulsion block. Now if you took your sell, your stop loss should be above this repulsion block right here, and then you should be aiming for where the last sell side liquidity. So once price gets to this place, you can see price actually got to this place. This is where you should be collapsing your trade. Whatever trade you took here or here or here, you should be collapsing it at this region. Another place you can also be collapsing your trade, it's this region. Why I highlighted this was I was taking a trade where I aimed for this low. Let me see why I aimed for this low. Okay, this was previous day's low, like yesterday's low on the 25th of May. You can see that was from here, this was the start of the day to the end of the day. So you can see this was the low on the 25th. So now on the 26th, I was aiming for price to get to that low, which I highlighted. You can see the horizontal line. So I was aiming that price would hit that low before reacting. So for me to engage in this bearish move, I was making use of the repulsion block for my entry. So this repulsion block were actually what was giving me nice entries, okay, so that I don't enter in a place that is going to hurt me. All right, so you can see that was how price started displacing. If you missed it, although there was a run here, you enter there, then you can see come back again, because sometimes price will want to kind of test a repulsion block twice, right? So it's up to you. Either price could get to this low and that will be the end, or it will actually hit, because most times it won't hit your target, but there is something you should always be targeting. It should be you exit here or you hold it up to this level. So once you hit the previous day's low, you should be collapsing your trade and then watch out for what next the price wants to do. And as you can see right here, actually these two lows here created an equal low, so it gave me a strong belief that price will always want to run down this low, because most retail traders will be seeing this as their support, and once price begins to rally, because they will see this as a pin bar on a support, and then they will want to buy. So but their stop loss will also be somewhere here, which smart money will want to come and run for their stop loss now before changing direction, and that is exactly what happened right here, right? So that is how you can use these vacuum blocks to recapitalize or get entry in a particular move. So what you need to expect, whenever your first order block has been achieved, the next ones that are being created will be giving you your entry. So you use the proportion block most times in place of the Fibonacci. So using this, you can see that you don't even need any Fibonacci anymore, all right? And they give you a very small stop loss. Imagine taking a trade right here, putting your stop loss here. It's very, very tiny, and then you are aiming for this low. You can see the risk to reward is very, very nice. You see a very long run and you're aiming to enter here. Imagine selling here, putting your stop loss just above here, and then waiting for price to run down to this place. You can see that this setup will be giving you up to 1:5. That is like, let's say for example, you're risking $1 for $5 or $10 for $50, which is a very, very nice return risk to reward ratio, right? So I think this is very insightful. Everything I explained here, you can also do the same for a bullish proportion block, right? But this time around, we won't be using the last up close candle, but I'll be using the last down close candle, like it's a bearish candle for a bullish proportion block. So it's just the opposite of what I just showed here. So I hope this video has been insightful. I'll see you in the next one.